derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Friday, long week. It was a holiday. We didn't even have a Monday, but for me, it was a long week because it was just brutal in the treasuries. Oh man, let's just go straight to that. Skip the E-mini a bit. ZB, holy shit! Look at this move, man. Almost got back to the high from the non-farms. Excuse me. So, yeah, I'm not sure what to make of it. It definitely caught me by surprise. You know, I still had my flattener on because auctions typically aren't that big of a deal, but that one was just, it was so bad. I lost some money on that one. I was very bitterly disappointed about it. But it has come back quite a bit. So perhaps it is just concerns about supply, and now that the auctions are over, maybe this won't be as strong of a force. I would also say probably a lot of people getting stopped out on that, right? But look at the flattener, and it stayed flat. So okay. Now E-mini had a pretty good run yesterday. Yeah, it was pretty bullish. We were saying it was bullish. We did never get to 45.35, so we owe I don't know what we're getting given, but we owe AO a prize, right? But they just completely collapsed back down. Now they're making some progress in the overnight. I don't know. I'm not as bearish as the wider market. I think that yeah, the equities market needs to take a haircut, but I don't think that it needs to be like one of these, you know. And it has been relatively mild and contained. So I would say, hey, maybe things are working the way that they should. Plus, there's going to be some things coming through. Like, it looks like a lot of companies picked up some debt and that they're going to be buying some shares back. So that's probably going to stem some of the bleeding, right? Well, look at the rest of the complex. Oil got just slaughtered yesterday off of, some moves that the Chinese made, trying to hold the markets back and stabilize those markets. But we're right back up. So now oil may be tracking the larger economy too. So gold and silver. Well, gold, it had its moments yesterday, but it looks like we're okay in gold and silver. Silver took an okay little move up, but they need to get above 24.5 right over there in silver. Kappa doing well. Copper doing well. That's where we should be. And there's the open. Pretty lackluster there in the treasuries. So it just look like they're going to tilt to the downside. I started a little bit too early today, I think. Now, what do we got on the docket today? We have PPI, right? PPI month over month, expecting a reading of spot 6, with the previous reading being 1.0. So, this nose has the potential to be really wild. Because if that comes in above expectations, given how far up the treasuries are, or how much they moved yesterday, it could be a doozy, but it could go hard the other way too. I mean, I think that the market here is largely trying to make a call that the longer term environment is largely about deflation, like it always has been. So that PPI ends up being a really important core factor there, right? So that the market doesn't seem to care what the Federal Reserve says about tapering, or what the ECB says about tapering, for that matter. So I don't know. David Cabrera, how are you? You know, I'm feeling better. I should feel like really depressed and everything, but I feel pretty okay. We can move on. I don't know if I'll take any. Well, we'll see what PPI does. Maybe I'll take a trade. I'm not looking to take a trade right now. We'll let them sort it out, I guess. Because I don't see like a huge reason to be taking a trade. Let's see, you got anything coming out over here on Twitter, eh? Let's see here. Brannigan Barrett. Market currently pricing 2023 hike in tapering to start and 2022. What these economists are effectively saying is the Fed is wrong on inflation and it isn't transitory. I mean, if that is the case, though, like I'm not sure that's what the market is actually trying to price in. But it's unclear where this flow is actually coming from to us. So I don't really know. What you saying here, RJ? Did anyone else take that? Yep. It is on the site and it is free, RJ. In fact, I have it here in Discord. I'll give you the link. Bam. This right here, I want that link. Copy link. Okay. This is the Yellow Jacket course. So yeah, it's a short little course. Should just take you like 2 or 3 hours. Probably, I would hope that all of you can pass it on the first try. But my goal is, I want you all to pass it with 100%, because I passed it with 100%. So I think you guys can do it too. I'm not that smart. You got to study really hard. Make sure that you remember the monthly codes, which I've already forgotten, frankly. And what contango and backwardation is, and be careful about your math, because they asks you to calculate like profits and losses on certain contracts. But yeah, it's a hard test. I'm telling you, it's a hard test, but you should pass it with 80%. Is the pass, and then I think that you guys can get 100%. So they started out a little bit bearish, and did you see there that the rates futures like really moved, but then things kind of tempered, came back. And when I look over here at the 6J is kind of tilted to the upside at the moment. Dollar kind of slightly tilted to the upside, so we might get Imano says, yep, tempered. Well, I mean, we do have like pretty big news here in 5 minutes, so I don't know if the market is taking like an explicit position, but we should have a poll, right? PPI above meets expectations below. Poll is up. I'm not expecting anything crazy. I think that they're probably going to come in. I haven't seen anything in the data that I watch that suggests to me that there's anything about that number that's going to be wrong. It seems to me like that things have largely cooled off, but that it will still be higher than usual inflation, and so the spot 5, spot 6 sounds about right. Now, the one thing I'm really unsure about is like I don't know how big of does it have to meet or
prior read,
beat or miss to make a move.
Year over year forecast.
I'm not sure, but we'll see.
They prior read 6.2%. Then the US PPI year over year forecast 8.2%.
Took the commodity advisor course, probably similar. Yeah, it's. Then have the it's very much the kind of stuff that like your broker would teach you, right?
5% with a prior read of 65.
Your introducing broker would teach you.
And the Canadian average hourly earnings year over year.
Oh, I need to turn him off. I'm sorry. You're not supposed to hear him. That was the financial juice guy. Or the financial juice stream. Yes, Financial Juice is a live squawk service. It's $70 a month. I have the link in. I have an affiliate link in the video description. There's also a $1,000 one-time lifetime subscription fee, which means that instead of paying $70 a month, you can just choose to pay $1,000 once and always have it, which is what I did. Although when I did it, it was a little cheaper. It was like $700 because it was like a special deal, like starting deal. So I've been with them from the beginning since they started, and I'm pretty happy with the service. Like I kind of feel like that it was kind of foolish for me to have traded before I had this. So yeah. US PPI month over month spot 6, core PPI spot 6. Okay. Sounds like China expects a surge in construction. Anthony says so many good things sometimes. Our perspective is a huge part of trading. If we shrink our perspective, we shrink our ability to be good executors in our time frame. Short-term scalper or swing trader, you still need a wider perspective than your time frame in order to be a better executor of your trade. I think maybe you're supposed to say that executor, but how's Financial Juice helping with treasuries? Yeah, so Financial Juice is not as good with the treasuries as News Squawk it would be. But what you gonna do? You get what you pay for, right? I mean, if you have the money, I would definitely go over that. Okay, so here comes the news. Oh man, there's like no liquidity in the 10-year. I'm not gonna touch that. Okay, so the PPI is slightly higher than expected. Month over month spot 7. Core PPI spot 6. Interestingly enough, the treasuries moved up on that. So let's see here. Which one was it that outperformed? It was the PPI, but not the core PPI, which suggests that it has something to do with food and energy, right? Let's go into the latest release. See where it's coming from. Trade, not as much. Food and energy. So there was a significant fairly significant increase in food and not so much in energy. That is actually maybe, well, I'm going to take a sim trade here. Maybe not. Foods and energy goods. Now, where's the bigger chart? It looks like it's a little bit too mixed to try and point to any one particular place where the spot 6 is coming from. It kind of looks to me like spot 6 is not enough to sway them. Could be wrong. Could be short 11. Credit Suisse cuts FCX to underperform as inflation support to wane. The red metal is called Dr. Copper for a reason, but we argue copper prices move in a direct correlation to the US 10-year break-even rate, and we advise investors to examine this relationship. I see. And they don't expect that to be taken off anytime soon, huh? So yeah, back to the news squawk thing. Here's the thing with the treasuries. I think when it comes to being an informed trader in the treasuries, the efficiency is more on the overall research side than it is on the news squawk side. I mean, Financial Juice does a pretty good job reporting on the auctions themselves. The thing that was nice about News Squawk is that they would also tell you about block trades and other things like that. Maybe they would tell you about corporate offerings. We had a lot of corporate offerings yesterday, by the way. But the one that really gets me is the bond market specific research. Like, there's a lot of information there that I don't have access to, and I really wish that I had a better research. Like I would be willing to pay up to $100 a month, maybe even for good research on that sort of thing. Like these auctions, the demand being so strong for that 10 and 30-year auctions was just absolute, because what we were reading at the beginning of the week was like the exact opposite, that it was like we were down on Tuesday because the market was concerned about all of the supply that was coming out from all of these different countries that week, right? And that, that was where I got the idea for the steepener, and it was just dead wrong. It was just dead wrong. That article was dead wrong, and the analysts and managers that were quoted in that piece were dead wrong this week, right? And I wish that I had access to more research to possibly sniff out what was going on. You say bond research is best on Bloomberg, but that's crazy. Well, that's a little bit different, right? So, like, yeah. The thing is we really need access to like the actual cash bond market is what you're getting at, or in Lucas, right? If you have a Bloomberg terminal, that would make a difference. Especially if I wanted to try and scalp this. I don't know. So the 10-year micros are very interesting to me because it is an instrument that can move quite a bit, but it's a little jumpy. So there's still not like the volume there yet. But it's still thick. There's still like 1,000 contracts at each step, right? So like, it seems to me like that makes it not very good for scalping for retail traders. Not for scalping. It's terrible for scalping. But it does have some things that are really good for like a swing and position trading. Cash bond market. Have you tried market access? Wait, is that how you actually spell it? I haven't bothered pulling up the 10-year. The thing is that I'm not interested in placing trades on it right now. If we have some success over here and I want to size up, I might take another look at the 10-year. Now you're in the market. Plug into the single global bond trading platform that amplifies your abilities and multiplies your opportunities. Schedule a demo. Yeah, but how much is that? That sounds like it's probably a lot. Insights. Data center. Resources. Trade. They have an Instagram. Wait, what? You have an Instagram for that? What? Now you're in the market. It's got these people probably saying, "Oh, I traded the bond market and I made so much money." I bet you that's what. Wait. What about Twitter? What's their Twitter like? It is spelled with an X. Have you looked at the spread on the 5-year? It's bigger than the DOM. Well, so look at the 30-year right now. By the way, is I doing something wrong? No, that's right. Why is there only one lot of liquidity being placed out there? Wait, is that for real? What the fuck? Am I the only one that sees that? Am I the only one that's seeing it like that? That's where there's 471 and then there's one and nobody's offering. What the fetch? Unless there's just a really wide spread and I can't see it. Oh no, wait. It could be. Okay, maybe it was that. Maybe it was because of that. I don't know. It's kind of weird. That's funny. Okay. So, it says they're over here pricing access all. Here, I'll bring it over here so you guys can see what I'm talking about, yapping about. Access all. First intraday tape for all European fixed income. Oh, I would be so happy. Community created. Stress tested data. Blah, 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 blah. Download the white paper. Ooh, they got a white paper. That's cool. Okay, but it's not showing me the price. That's not showing me the price. How much? How much are you gonna charge me a month? How did I get there? I got from here, trade, pricing, access all, composite, bond ticker. What's this? I think when being an informed trader, you can't really discard the flows that options. No, you're right. Options is a big component. I think the thing is that what you have to do is you kind of have to focus in on what particular thing what particular flow do you understand and can predict, and when can you predict it and not, right? So, and a lot of that will be limited by what data you have. It seems like I'm not going to get any pricing data without you say it's a great product. Yeah, but do you know how much it costs? So it sounds like I'm going to have to contact them to learn more is what's going to happen. I guess I have to fill in all of this stuff. Dun, 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 dun. Utah. I'm only going to click US Treasuries here on this, and this I'm just going to submit and see if they respond to me. Search for MTF fee schedule on Google. No terminal fees only for dealers. They have a few schedule and a PDF on their site. One can get to it by Google search, but for some reason they haven't kept fee schedule easy to access. Okay, so MTF fee schedule. Okay. This schedule sets out all market accesses MTF fees. Fees apply only to dealers. Fees are listed by product. With each product, there is a choice of fee plan. Dealers may charge fee plans upon 30 days to take effect. So does that mean that if I just sign up for them, I just get the data? But then surely you have to have an account with them, right? Dealer transaction fees. Monthly distribution fees. Do you actually have this and use this every day and you've been holding back on us, Imanu? Come on, my man. But that does sound like what we want. That does sound like that would give us the market data for the cash market. Like this is, I'm surprised that I've never come across this before, because I've searched for that sort of a thing a lot. Search for that sort of a thing a lot, and well, it doesn't matter. I sent them a message, and they're going to contact me, and I get to talk to a guy. I'll talk to a guy, and who knows? Maybe if what I hear is really good, I'll bring him on or something. But doesn't sound. Can you elaborate on how this is helpful and where? Sure. So what happens is the futures market is where price discovery happens in the treasuries. It is okay. Sorry, I need to collect my thoughts here a little bit because this is a really deep, complicated subject. Okay. When you're asking about where does price action happen, there's a lot of studies where they try and say, okay, like when a price movement occurs, where do we first start to see orders for it? And in the treasury market, there have been studies on this that suggest that the price action originates in the futures. Okay. But there is a lot of flow that does not come through the futures. The real money is still in the bonds themselves. You buy the bonds themselves and you're using the futures to hedge yourself or whatever, right? So even though I think that you get a really good idea of what is happening right now by looking at the futures, if you want to do something like calculate that there is a mispricing in the curve, or that which way the basis is going, and these sorts of complicated trades, it's a little difficult to get the data. And what you can do is you can go on to QuickStrike, which is how those that information is shown to you on the CME website. You go to the CME website and they have these fields that show you like the treasuries on the run, whatever. But the issue with that data is that it doesn't update real time, right? So if I'm over here, if I wanted to make a robot that was market making in the 10-year, for instance, based on what the yield was in the cash market, I wouldn't be able to do it here. Or rather, I'm not able to do it here. I don't have the data to do it. And you know, even on a larger scale, if I really want to go in and test like some yield curve trades with these instruments, can't do it because it's only been around for like a month, right? I could do a yield curve trade over here, but then you have to worry about the change in the what do we call it? You know, the factor, how many of these you take compared to how many of these you take, and all that sort of thing. So it's a complicated thing. So if there was a way to get live cash treasury data and analytics and stuff, that could potentially be useful, especially if that platform provides ways for us to either program within that platform or like export that information to Excel live. Okay. So we'll talk to them and we'll see. But that's not really what I'm looking for, you know. What I'm interested in is a report that says, based on the number of funds out there that are, you know, doing the classic equity bond hedged portfolio, how many, and based on how much the E-mini went up that month and how much the treasuries went up that month, how many funds are going to have to sell X amount of stocks and buy X amount of bonds, and what kind of impact can that potentially have on the market, right? Who are the people that are the primary that will go and participate in the auction? Can we develop a model that might be able to predict future orders from the auctions? These sorts of things. I really want that kind of analysis. And the Wall Street firms do post that kind of information, and from time to time I'll get it on Zero Hedge, but I really wish that I had stuff like that to read every day, and I don't. So if I found a subscription service that was treasury specific and had that level of analysis, as I've seen some, and what they share was not really all that that great or worthwhile, you know? They weren't real deep dive things. I'm looking for something where it's like a 10-page report, you know? But if I could find something like that, then I would be willing to pay. And that's what this all started as. So Imano gave us something really good, but I'm surely there's a subscription service or something that we can use. Okay, Vladimir, good morning. Software related question. Did you buy Jigsaw or using someone with a broker? If you own it, what package do you recommend? The web offers 3 different options. Okay, so I don't think that there's any way that you can get Jigsaw through, some deal or anything. You just have to buy it. Okay. Now, which option you buy is entirely going to be dependent on your financial situation, right? So, pricing education, because really the difference between them is education, right? Pricing in education is something that's really hard to do because the value of that education is going to be different for everybody, Like, it's not like you're going to do that education and you're immediately going to be able to make X $1,000 off of it. That's not going to be the case, right? You're still going to be effing hard and you're probably going to lose money even after all of the education they can give you, right? So, if the cost of the platform to get started is enough for you to be concerned and asking that question, then you should just go for the basic package. You should really just go for the basic package. If you're a high roller and you have the money to waste, not to waste. I mean, it's not a waste, but I'm just saying the money is not necessarily a concern and you're really just asking, am I going to get my value from it? I've never heard anybody complain about the education or what they got when they purchased those other levels, right? Yep. If you want the software, there's only one package, $500 for it once and $500 for a year to trade off of it live. Right. Yep. And it's not even $500 a year. It's like you can pay $50 a month. For the live trading license, which is what allows you to put the orders on the screen. But you're beginning, you don't necessarily have to worry about that, right? Because you're probably just going to trade sim. So if you trade sim, you can put orders and trade sim, no monthly fee, right? But then over here in the micros, if you want to start putting them on, I wish that it was different. I wish that it was like, okay, if you're only trading micros, then we're only going to charge you $10 a month, That's what they should do. Pete, get on that. Hey. But yeah, so I do have in my video description, I have an affiliate link for Jigsaw. So if you do end up purchasing Jigsaw and you do so through the affiliate link, that helps the channel out a lot. And we use that to spruce the stream up a bit. Although, yeah, I don't know. We're just saving it for now. At some point, an opportunity is going to come by, and we do something with that money. I think I'm tempted every day. You know what I've been doing? Every day I'll go out on KSL, and I'll search for speakers, because the headphones are okay. These headphones are good. These headphones have really good bass, actually, but nothing beats the car, man. My car, it's like an Acura TL with the technology package. So it has a good speaker system with a subwoofer built into it. And I love listening to music in the car. That's what music is supposed to sound like. And I go anywhere else, like I'm in my gym, or I decide to listen to music in the backyard when I'm working, or even if I just do it, sitting down on the couch, sounds awful. I just want something with the thundering bass, I want to feel the pump. But so we go out there and I'm like, okay, let's go look at some. You can spend thousands of dollars on this sort, but I've thought about let's just go spend $700 and buy one of these JBL things. But then I think, well, number one, I should use that money to help the stream, and number two, I don't really need it. I don't know if it's worth that much money. So what I've started doing is I've started trying to sell stuff. Actually, I'll show you. I'll help you out. Maybe it'll help. that is not, none of you are actually going to care. I'm my old audio interface that I don't use anymore, I'm selling it, hoping I can get $50 for it. But I did the auction the other day and like only 2 people bid, so I had to change the auction up a little bit. Not enough volume on back contracts yet. Oh, anybody rolled over their instruments? It is. Well, do you notice that it's pretty light over there in ES? Let us do that. Database management. Rollover. What are your thoughts on being a funded trader? So, Dave, I have at least 3 separate videos on that you can go and watch on the channel, including one that I put out last week. So, but a brief summary is that the profit targets are much more aggressive than most traders realize, and that you are unlikely to pass unless you are doing something very risky. So if you want to do a YOLO, like you have a strategy that's kind of YOLO, like it works most of the time and you can make a ton of money, but then every once in a while it blows up, then that's a perfect place to go and use the combine. But for the rest of us, you are probably better off just putting, a few thousand in a regular account and coming over here and trying to position trade the micro treasury futures. And maybe, and not make, instead of your monthly target being, $2,500 in a month, your target is just, if I can pay for my platform fees. Right. But and to that point, like for the software, I have affiliate links for the software because that's Jigsaw. It's good software, man. And I mean, I've had some people try and bust my chops over having affiliate links for Jigsaw, which I think is absolutely ridiculous. Like, it's a platform, you can put orders in on it, and it's really good at what it does, and I 100% support it, and I'm quite proud to have an affiliate link for it. And yeah, when you do use the affiliate link, it does help the channel out. For News Squawk, I'm really proud to have the affiliate link for News Squawk. Not very many of you have used the affiliate link for News Squawk. We usually get like 1 or 2 a month for Jigsaw, but for Financial Juice, I don't think very many people have clicked that one. I should go back and look at it again, but I really highly recommend Financial Juice. I'm really like the number of traders out there that don't have a News Squawk. I think that's something that should change. Personally, I think that's something that should change. So yeah, I have an affiliate link for News Squawk. Quite proud to have them. I think that they're a really good service. I used to have affiliate links for Earn to Trade, but I got rid of it. Because I don't want to be like deriving people there, like it's not like they're not scams. There are some situations where for people it might make sense, but I think for the majority of traders that it doesn't make sense, and that I don't want to be pushing it like that. Do you think News Squawk is good for new traders, Zach? Well, News Squawk is like the best News Squawk you can get as a retail trader without having to go up to a Bloomberg terminal, right? But it is very expensive. It's something like $250 a month or something like that, right? So if you can afford that, then go for it. But otherwise, you use Financial Juice. But that is, if you're serious about trading, I think that you need to have a News Squawk. Yeah. Lucas says only 20% rolled according to the CME tool. See, so I'm seeing that the treasuries are moving down here. Maybe I'm going to regret doing this because maybe this turns into a real monster. But because the PPI didn't really move them, we should see... Oh, okay. Actually, FedSmester is speaking. A post-meeting policy statement that included an evaluation of how changes in economic and financial data affected the medium-term forecast would be helpful. Since April 20, the job market has undergone a remarkable improvement. Inflation is expected to remain high in 2021 before declining. I see upside risks to my inflation projection. Like the Bazinga trials? Yeah, Bazinga's okay. I don't think that Bazinga is as macro focused, but one of the nice things is that almost all of these squawks provide a free trial. Like you can go and do a free trial once for news squawk and you can see that it really is good. Yeah, let's see. Look, they tick back up. In order for me to take a trade, even a sim trade here in the treasury, I don't really feel like taking much more risk this week. Like that hit yesterday was very discouraging. My first experiment in a flattener was okay. But I got it wrong. I got it wrong. Like the thing that I'm noticing, by the way, is that it's like, okay, like say I take the flattener. So I go long the 30-year and I go short the 5-year, okay? And let's say that rates go up. So I'm making a ton of money on my 30-year and not on my 5-year. I think at that point, if that's something that I want to keep on for a really long time, at least given the current economic environment, I think that it makes sense to just cut off the losing side of it. Yeah. I don't know if it makes sense to hold the 5-year on here, because it's like, yeah, I don't want to be, I want to trade on the change in the curve. I don't want to change, if they go up or down, I want to trade on the change in the curve. But the fact of the matter is that they're correlated right now. If we were to move up in rates, the curve would flatten or would steepen rather. So this 30 is going to go up more than the 5 right now. That's just kind of like the correlation. So like it maybe makes sense when you're starting the trade to hedge, because what you're doing is you're taking a little bit more on commissions at the beginning, but you're limiting your risk. But then once you have a little bit of profit built into it, why not cancel this side off and just let it run and then try and hold that for a really, really long time? Hey, Win, how are you doing? By the way, I need to go back and write a new feature for our thing. Maybe we could do that now. I don't know. We'll see. If it gets quiet, maybe we will go in and change it. I want to make it so that some of you guys can force it to say things, because I don't click it very often anymore. Honestly, though, for Win, well, we still got to get Win into Discord. Oh well. We were able to get Ace into Discord once. And get Win now. Okay, so they're posting the link of FedMester's full comments here. Oh man. Oh, we haven't even gotten into the ugh. I haven't even gotten into the big piece of news today, have I? Oh man. I don't know if I want to talk about it. Well, if I'm going to dive into that, I got to make sure, because you guys were asking good questions. I hope that what I said was useful to you. You guys were asking questions about software and services and stuff. If you have any more questions like that, let's answer those first. I will need a longer extension cord. Let's see. I found your channel almost 3 years ago, so give me another. Well, you need to get like go buy like a wireless headset. Go get one of those Antlion audio ones or something. How much were those? Antlion is an antlion is an enemy from Half-Life, the video game. They have these microphones so you can put on any headset. The Mud Mic. Oh, but they have headphones. Do they have them with them built in? Nah, they don't. From a Saks perspective, do you think we are at a disadvantage? No question about it. They have more information. They have more money. They have all sorts of things. It doesn't mean that they'll always come out on top. I mean, what do you mean, why? Okay, so you got to remember that Goldman Sachs is a company with thousands of people working for them who are all dedicated towards helping them be the best execution place in the world, basically. So is what it comes down to. So, like equities is a even better example in future. Like here in futures, we're like, well, we can't see the cash market. Okay, but over in the equity market, it's like, okay, like a company holds all of these assets, right? Like they have a building. What is the building worth? They have bonds that they've put out. What are those bonds worth, and how much do they have to pay on those bonds every month to maintain those? Like there's all of this information, and they can literally go in and build a spreadsheet and say, okay, based on everything that we know about their balance sheet and everything, what should they be worth right now based on current market conditions, like the current interest rate and things like that, right? Can you do that? No. Like it was a very complicated data platform that requires constant maintenance from hundreds of employees to maintain that, right? It's a huge advantage to them scalping equities, right? There's just this massive amount of data that they have. And on top of that, they have more money because, which means that they can put on more risk than you can. So, for me, yesterday, putting that flattener on and having the auction come out against me and being so strong, that's like a huge deal. But for them, maybe not such a big deal. Maybe not such a big deal, right? So are you at a disadvantage? Yes, you are at a disadvantage. That doesn't mean that you can't make money. Lucas says, always remember, man, no one knows really anything, especially in trading. There are no group of individuals who know what is going to happen. That's true. Right. And you are just as capable as anyone else at looking at what the data flows are in the market and determining what is appropriate, right? Or trying to predict the future flows. So, and that's really where it comes down to is, so they're great at equities. What about futures? Well, they don't mess in the futures nearly as much. So they didn't know a whole lot about how they do their performance there per se. Plus, I've worked in the equities sector. I mean, I talked to the futures traders once, but yeah, they're still going down. I mean, it's only 3 ticks. but it does look like the bonds are a little bearish this morning. I should be careful though. This is kind of like what happened the other day, right? Or really the pattern has been all week. They start selling, it looks really good. I'm up 10 ticks, 20 ticks, and then all of a sudden it completely reverses. Hasn't that been how it's been going? China lobbies Australia Parliament on joining regional trade pact. Why would Australia make any kind of deal with China right now with what China has been doing to them, man? Do we have any other news coming up today? Wholesale inventories, New York Fed Treasury purchases, Baker Hughes? No, I don't think so. The issue that I have over here in like trying to take a trade is, number one, we've certainly seen situations where the bonds look bearish and then they flip back up and they end up being really bullish and they go even higher. One. Two, we had one piece of news and it wasn't really all that big. It didn't create that big of a reaction in the market, and it's a Friday. So like, I feel like this is going to be watch the E-mini open and then that's it, you know? So I really, and I could say take a sim trade over here instead of taking a live trade, but maybe it's better for me to just practice self-control and not take a trade at all, right? And maybe it moves, but if it moves, we can justify our decision by saying, well, we didn't really have any reason to believe that it was going to move down. There wasn't something that was telling us, that was giving us a strong prediction that it was going to move down. I don't know why I'm tempted to look at equities order flow. Are they more volatile than NQ? They have wider spreads. So this is where it gets interesting in equities, is that in NQ, even in NQ, their spread is usually only 1 or 2, right? Right now it's 2 ticks is the spread. Okay. But in equities, it can be, if things are priced in cents, the spread can be, $1. Right? So there's this whole thing where you could come in and you could improve the best bid or improve the best offer. That's a decision that you can make over there in equities, which kind of makes it a very different game, doesn't it? But you still kind of want to be, the way, if I was going to trade it or if I was going to scalp it, would still be looking at other instruments and trying to create a correlation and look for a temporary mispricing and take advantage of the temporary mispricing, right? But there's a reason why all of these automated trading firms are very much more interested in equities than they are futures. In fact, as I understand it, a lot of the really big algo guys in the futures kind of went kaput. It was too difficult. They weren't making enough off of the spread. They weren't making enough off of the spread to offset when they had adverse excursion. So there were some people there was at least 1 or 2 that were pretty big in the futures market, and they basically got out. Okay. So let's talk about the vaccine mandate. Have you been following this at all? I'm surprised. Well, you know what? We don't have Uzi here. Uzi certainly would have talked about it. Why were they interested in the first place? Well, anywhere that you have an opportunity to market make, you're going to look at, I think. anyways, oh yeah, Biden and Jin Shi had a call. That one was interesting. But I think this deal with Joe Biden mandating all employers with 100 employees or more that they have to, their employees either need to be vaccinated or tested weekly. Not good. I would even dare say bearish, but probably not super impactful in the long run, because what's probably going to happen is as soon as he signs the executive order, and I actually kind of wonder, like, are they even actually going to do it? Are they even actually going to do it? Because the instant that he signs that executive order, they're going to get sued up the wazoo by every state. It's going to be like the largest, it's going to be like 30 states sue him. And it'll almost immediately go to the Supreme Court, right? And I don't think that the federal government has the authority to do that. But more to the point, let's just assume that he does have the authority to do that. It's the most boneheaded political decision I've ever seen. Like, it's not only Republicans. In fact, a really big portion of the truly vaccine hesitant are like young minority Democrats, right? So you're really kicking a hornet's nest there, man. Like, I can't believe that was the decision. When I said I'm worried that they're going to do something really divisive. Yeah, he did it. And I think that the idea here is put out some policies to show that we're doing what we need to do for the Delta variant, and that will distract people from the disaster that I just caused in Afghanistan. I mean, that's almost certainly the case. Kumo did the same thing. But the problem is you are picking a fight with a lot of people that you probably didn't need to pick a fight with, So I don't think that it's going to improve his support. Like, maybe he thought, oh yeah, and it will be really good among my base. Yeah, no, it's not. You're going to pick this fight that you're going to lose. And you're going to piss off a lot of people in the process. It's, I think it's a boneheaded political decision. And I see that, and I really have to wonder, I really wonder if Joe Biden is going to make it through his first term. I really, honestly, I'm very seriously wondering that he will resign in his first term. It's starting to look more and more likely to me. PhDs are one of the largest hesitant groups. I mean, I did see that study on that. I think that that's probably a little bit overhyped, but because it's not like PhDs are like the largest vaccine hesitant group. It's more that PhDs are substantially more likely than other education levels to be hesitant. But I don't think that says anything about the science behind the vaccine. I think it says more about the approach to promoting the vaccines, right? Like, your approach to approaching the vaccine should be sharing all of the information and the science and then letting people make their decisions. But if you kind of hedge or meander around the actual facts, and you say, oh, you people aren't smart enough to make your own decisions, we just need to force you all to do it, then who do you think is going to be the most resistant to that kind of a tactic? Yeah, it's going to be the PhDs, the people that feel like that they have the base understanding of the subject to make their own decisions, I would be okay with that policy if it comes from private enterprise, but when it comes from the government, I oppose it. Why get in the middle of business? Why not also require for everyone to be vaccinated at parties where there are more than 100 individuals? It's really is. It also does kind of seem like an arbitrary thing, right? Like, I think what happened was this: the left has basically wants to try and force everybody to get vaccinated. And so they went through and they said, well, the record on a federal mandate isn't very good. So what can we do? How can we kind of skirt around the law to give ourselves the best chance of a mandate holding up? And that's why I think they decided, oh, well, we can, through the Labor Department, force this regulation that, to protect workers, that people have to be tested weekly. Like, okay. It probably is their best chance, but it's probably still not going to hold up. But that's the wrong way of going about it. It's not the wrong way of going about it. What I mean to say is that, like, from a political perspective, you should be more concerned about how many people you're going to piss off. Because I think that the negatives that you get from this far outweigh any kind of benefit that it might have done for Biden politically, right? Vaccine hesitancy. Yeah, it seems like that when the vaccine got approved, quote unquote, that there was quite a bit of hesitant people, went ahead. We're like, okay. Have you noticed a 920 little volume spike in treasuries usually? I haven't necessarily. What I have noticed this week is that around this time, they all of a sudden turn bullish. Like, you can see the flow coming in right now. It's volume wise, it's not huge yet, but it wasn't approved. It was approved. It's so freaking. Man, the way that they did this, I think is super sketch. Okay, so there's two products. One was the product that was created for like the emergency use authorization, and the other is the product to actually get approved. The thing that they actually inject you with, it's literally the same thing, right? It's just two different SKUs, basically. But the difference is if it's like an FDA approved thing and you take it, then something happens to you, you could sue for it, right? But not for the experimental one. And so what are they doing? They approved the vaccine, but then they're still giving you the experimental SKU so that you can't sue them. So it's pretty sketch. It was pretty sketch, but hey, they did approve it, which is to say, if you were concerned about taking the vaccine because you thought that the CDC was going to come out and say, actually, it's a lot more dangerous than we thought, and we can't approve this, right? That's gone. The FDA is saying that we've tested it and that we can authorize it. Both are better than non-exposure to the virus newer version. Yeah, that's true too. So here's the thing that continues to irk me is that, like this, you need to be tested every week requirement, for instance. That's total nonsense. Like, look, I've had it. I have the immunity. Apparently, my immunity is better than if I had gotten the vaccine. But I would still have to be tested every week. Or if I'm working from home, do I have to be tested every week? Like, that's going to be the one that's really crazy. Is like, okay, are they going to put this rule in and then I'm going to have to go and get tested every week, even though I'm working from home right now? Like, come on. So I don't know. It doesn't seem to me like they thought it through very well. I'm surprised. You guys are actually surprisingly mild about this. It doesn't seem like you're all that interested in this subject. I really thought that this was going to get you guys yapping a lot about it and how it's not right, and or the problems with it. I don't know. I tell you what, some people on Facebook are, well, okay, the people on the right are like so mad. I don't think I've ever seen them more mad about a government policy. Another thing I read is people are expecting a vaccine to take years for approval because they always have taken years to approve before now the world coordinated together. So say that. Yeah. Well, the thing that I think is kind of weird. So it comes down to this. Were the requirements that they have in place for vaccines really necessary in terms of as how strong they were, right? It's the science that I've read says that if you experience a side effect from the vaccine, it's going to happen within 2 weeks of you getting it. If you've had it for 2 weeks and you don't have any side effects, then it's gone. It's done. All of the mRNA disappears, has been used and is discarded. You've developed the immunity and there's no more. It's no more a thing, right? So if that's the case, then why was it years and years and years to get something approved before, right? They came in and they streamlined the process. That seems like that's appropriate. Now, on the other hand, I also kind of ask, how are you so sure that there's not a long-term side effect from an mRNA vaccine if it's a brand new thing? But I'm not saying that there's no answer to that. I'm just saying it doesn't seem to be a question that I see asked. What? I remember as a child in school, we had a shot record we carried with a little brown envelope with our immunizations recorded. Really? Yeah, I mean, there's always been immunizations required at school, but never had carried it on a brown card that I carried with me. Anything that Biden says is just a waste of internet and data resources. It could maybe. There's going to be a war over this, man. If he really, here's the thing that I think is interesting about this. They went and they made the announcement. If that's really what they're going to do, don't you think that they would have said, okay, here's the executive order. I'm signing the executive order. Yeah, when you make that's what Trump would have done, right? He hasn't put the executive order out yet. So is he really actually going to do it? I'm a little, I'm just a little bit skeptical that he's really actually going to do it. But if he does do it, the instant that document is signed and put out, is going to be all out political war. Political and legal war. Oh, we carried the record to the school the first week. Oh, okay, yeah. I think you do have a big, I don't know where they track that. I haven't had my son in for a shot in a while. I haven't had to. It'll be soon though. Oh, we did take him in to get his blood drawn though, because he was kind of being a little weird. I think he's got maybe a little bit of a problem because this is now the third time he's gotten a runny nose. And it's probably his white blood cell count isn't very good. There's AO. So you missed the AO at the very beginning of the stream. I was saying, oh, no, AO was right. We never got above that 45-30 yesterday. I thought that maybe there would be some options, gamma squeeze into the close, but nope, it didn't happen. It was the other way. They came all the way back down. But I wish that you could have warned me about the 30-year treasury auction. No, treasury is not your thing. I wish somebody could have warned me that the 30-year treasury was going to be the strongest, most blockbuster, crazy 30-year treasury auction ever. Your son is getting a blight. No, a runny nose. He's getting small. The one of the girls will catch us, a little bit of sniffles, and then he'll catch it. And the other, we had a period where his stool was pale. Does that make sense? Like it come out, it wasn't brown, it was like peach colored. And so I looked it up, and apparently it's the bile and everything that makes your stool brown. So it could be a sign of a liver problem. So we took him in, and they said, well, we need to get blood, draw blood. So they drew blood, and they said everything is fine, but we should get blood again in a few weeks, and that his white blood cell count was a little weak. So the thing I'm concerned about now is he's got a runny nose again, and is his white blood cell count still kind of weak? Is it going to be difficult for him to fight off the cold? It's not like his life is in danger or anything, but it's just going to be really miserable for a while, right? No. Brown can be no. I'm saying like the color of your stool, it comes from your liver. So if it's white, if your stool is like white or very light peach, that could be a sign of liver dysfunction. But it looks like that what happened is he was just sick that week and a little weak, I guess. Justice Breyer on court packing, karma's a bitch, Democrats. Wow, okay. The treasuries are kind of hanging out down here. Maybe they are just going to finally have a day where it's just bearish. The E-mini took off there. Oh, you know what? I'm not looking at the data. 1221. Okay. $12.21. Do NQ. $12.21. And where is my YM? We'll do that one too. Even though it's like basically hidden right now. Cool. So how much of a jump was it? It was almost a 10-point jump on the open. And it looks like that was kind of correlated with the treasuries moving down, but there's a little bit of pushback. It might not be so simple. Should be the worst day to try it if choppy. Yeah, AO says you didn't even roll my contract over. Do you think we'll make new highs by Tuesday? I'm not so sure about that one. That's a little too far for me to even think, to be honest. I don't know. To be honest with you, AO, I really got hit hard by my flattener not working out. I mean, it's not the end of the world. It was like a $40 loss on a $1,500 account, right? And it was like the first time doing a flattener, and there was a lot of experimentation in there, and it wasn't like it was a terrible trade. It was wrong, right? We were making a bet on the rates increasing and steepening, and instead concerns about the supply in the bond market related to the auctions apparently made the interest rates decline. And we weren't the only ones that were wrong on this, right? But they hit me hard. It was very disappointing. It wasn't like these other ones. Like, man, these other times when I've like blown accounts or whatever, or lost $500 in a day or whatever, those were like so like depression and what's wrong with me. And that I feel in fairly good spirits, especially when I'm here with you guys on the stream. But it also kind of made me take a step back and say, okay, I'm probably not going to be trading my best just from a mental perspective. And since that trade didn't work out, I don't necessarily have a good informational edge in the treasuries right now, right? Nor do I necessarily have a good informational edge on the S&P 500. And when you add all of that on top of that, it's Friday and all there was for news was PPI and didn't really do anything. I can't really say what's going to happen. AO says massive 5 point. Yeah, they came back. Like it was a really strong run up and then they came all the way back. The treasuries are still pressuring. Although it looks like that the flow in the treasury is once again most strongly correlated with the Japanese yen. Well, we should be careful there with that one because you often see some rebalancing going into the weekend with the currencies. AO says it's the first time I am stumped about the direction of the ES. Well, what price did you get, Ace? Look at that. That's pretty. Let's try a sim trade here. Let's just try a little bet here. This might be just like a disaster, but hey, you know what? If I take this and rates end up going down, like, cool. They actually, sorry, the treasuries end up going down and rates increase, like, good, because that's what should be happening. If I'm wrong on that, this is just a sim trade. I don't know. Well, he said he lost 30 points yesterday, but he was right about the bet that we made with him yesterday. He was right, wasn't he? He was right. We never got 43. Sorry, we never got above 45.30. He basically called the top. Yeah. I wouldn't say that that's like a huge deal because I'm pretty sure. Correct me if I'm wrong, AO, but I'm pretty sure that the reason he's saying that is because we're most likely to set the daily high or low in the first hour, unless it's a trend day. IQ says short the treasuries, Seth. Well, I'm thinking right now. What I'm thinking is that the S&P 500 is maybe a week again. And that we've had this many times this week where they're kind of a little bit bearish around this time, and then all of a sudden the buy volume comes in and like we skyrocket up. But I'm gonna keep it tight. Like, I think I should be stopping out before it gets to that 8, if that's what happens. Bayo says, yeah, that's right. Also, the indices move on the week is dependent on where it opens. Well, no. Don't say it that way. Because now you're implying causation, right? But where they open on Sunday night appears to have a certain amount of correlation in terms of what the move on the week will be. You gotta be careful with that sort of thing because it's technical analysis, right? One of the big problems with technical analysis, even if you actually do find a usable statistic, something that you can actually use in your trading, is that it doesn't necessarily tell you why that thing happens. You know, for instance, volume profile stuff. A lot of volume profile is based around, we'll go back to the previous day's point of control. If we move out, if we open outside of it, and it's not a trend day, we're likely to move back to the previous day's point of control and touch it. Well, the reason that is so is just because of the average volatility of the index. It's really what it's just saying is stock prices are martingales, right? So that's not necessarily an edge. Not always, but it's a 40% chance the stats show it, yeah. See, but here's the other issue that I have with those kinds of trades is that they don't include risk reward into those probabilities, right? Like if I could say, for instance, if we open up outside of the previous day's value area, if we open outside of the previous day's value area, then there is a 60% chance that we will move back to the previous day's point of control and with 10 points of risk, right? And if the stat included like the amount, like your stop in there in it, then it would be something tradable, right? But that's like never how it works. It's always like they just test if it touches that at that point, and it could go like really far against it in the meantime. And so you don't really actually know what your risk reward is. And when you actually like game it out and everything, very often it turns out that there's no edge in it. Because you're going to get stopped out, or you don't actually make enough, you know? So that's kind of why I stopped using those sorts of things. But it doesn't, I still think those kinds of investigations are useful, because what you can do is you can say, okay, I notice this thing tends to happen. We tend to see a move at this time of day, for instance. Why? Right? Now you can sit back and you can say, is there actually a reason? Like, can we predict the order flow that happens around that time? You know, it gives you a hint that maybe something is going on, and then you can dig a little bit deeper, and you might be able to find something that can predict that order flow, right? Your last chance to take your 2 points. No, I'm not going to touch it. I'm going to focus on the treasury here. Look, I got a tick up. Looks like for now that the E-mini just likes that 4,500 spot, huh? Oh, by the way, is this, I have this on micros, right? Yeah. And yeah, okay. That's fine. It says maybe you're right, but I found it interesting. Sure. Well, I'm still really interested in how you trade AO, because you were saying that you use order flow. So I don't know. Like, and it's on the E-mini, because the issue that I continue to have on the E-mini is like, if I come over here on the treasury, okay, like just as an example, okay, I went long at 10 here in the 10-year treasury, right? There was some volume that went into 09.5, but 09.5 never pulled. So I was never really at risk of losing a tick so far. In fact, let's take this back and say that we will put a stop limit in here, 400, something like that. Okay. So now it's like a risk-free trade. Okay. How did it do that? So just luck? Because to be honest, I just looked at it and I said, well, it looks like that there's a good chance that it's going to turn around here, especially if the E-mini gets bearish. Right? I didn't even think about it. And I do that all the time in treasuries. You know, it's just like, I think that there are a lot of things with my read on the order flow in the treasury, excuse me, that have almost become unconscious, right? But I can't do that in the E-mini. Like when I start doing that sort of thing in the E-mini, oh, I get screwed. I get so screwed doing that sort of thing, man. Oh, really? I used to trade CFDs using technical on a weekly. How did you end up getting hired by a firm from doing that? I mean, were you having a lot of success with CFDs? I feel like that I how do I put this? I was in uni. Yeah. See, I feel like that. How do I say this without like sounding like egotistical? Because it's really not. It's really kind of more of a knock on myself. What I'm trying to say here. I think that I have a lot of experience and skills that are really useful in trading, and that would be really useful to say at like a prop trading firm or like a bank. Probably even better would be more like a bank. But I don't really have this super strong trading record yet. That you come in and you have like 2 years of really profitable trading, and oh yeah, we definitely want. I wouldn't be like that. Yeah. So I don't think that I have the record to get hired by a prop firm. Too bad there aren't any prop firms in our country. Yeah, well, the whole prop firm thing has kind of died down. Would like to see how traders in the prop firm execute. Well, I mean, have you ever watched Axia? Because Axia, they will straight up show you. They straight up show you sometimes. Oh, look at that. Okay, so now I've got to bail. Oops, not what I wanted. Okay. I got lucky there. I misclicked. I clicked and I didn't have it set to auto, so it didn't do the market order. I lost 1 tick. Cool. It was a good trade still, right? Like I had it went a little bit in my favor. I had something that was kind of going. I got a good spot, and then when it didn't work out, I just bailed. Wish that it would have given me break even, but that's okay. Maybe I should have put my. Should I maybe have my stop a little bit more like 1400 or something? If I can do a volume stop. I studied econometrics. Oh, there you go. Because the issue that I have in the mini is that I'm looking for some sort of a signal where orders in the futures market gives me a good idea of what future orders could potentially come in, right? When I think I have something in ES, it doesn't work. Oh, by the way, I never turned on the robot. I want to enable him because I have I changed him a little bit. It should be more sensitive. It should take more trades. Okay, so the equity market continues to be a little bearish here, right? I don't think I want to trade NQ at the moment. Oof. Well, that's a little bit too much of a push right there for me to try and follow. Imano says the EMD is used for dirty dispersions by our stat arbors. Dirty dispersions, that is not a word I've heard before. Radial, no. that Google search doesn't turn up anything. What about SSRN? Okay, so there's a spot right there. I'm gonna. Actually, I probably shouldn't have taken that as early. I probably should have waited a little bit. Imperfect correlation baskets. Who would have thought it would have hit 10 points? Well, I'm not so sure about what the treasurer is going to do, but, you know, I think that, especially off of how the open has gone so far, that there's could be good reason for the E-mini to be really awful today. You know, like sometimes they just close on weakness, right? Okay, so I'm gonna wait on that one and just note where it was right here. So we did correctly identify a hole. Do you see where the volume was created there, in fact? But it didn't create enough of a rebound, right? There was the rebound. Did you see it? It was pretty good, but it wasn't to our target. So I think I should just leave it alone for a bit. Okay, you're saying, where was it that you put imperfect correlation baskets for dispersion trading? Because I've been trying to search for like you know, like a scholarly article about the statistical behaviors of an index. Businessperspectives.org blocked because of malware. Dispersion trading math, equity correlation trading. NYU math. Oh, yeah, that's the one that I just clicked on. Okay, let's read this one. This was from the business website. This study provides an empirical analysis backtesting the implementation of a dispersion trading strategy to verify its profitability. Dispersion trading is an arbitrage-like technique based on the exploitation of the overpricing of index options, especially index puts relative to individual stock options. The reason behind this phenomenon have been traced in literature in the correlation risk premium hypothesis, i.e., the hedge of correlation drifts during the market crises. As the market inefficiency hypothesis, this study is aimed at evaluating whether dispersion trading can be implemented with success, with a focus on the Standard & Poor's 100 options. The risk-adjusted return of the strategies used in this empirical analysis has beaten buy and hold alternative on the S&P 100 index, providing a significant overperformance and low correlation with the stock market. The findings therefore provide an evidence of inefficiency in the U.S. options market and the presence of a form of free lunch available to traders focusing on options mispricing. This lecture 10, I think, maybe more what we want. Okay. Dispersion trading refers to trades in which one sells index options and buys options on the index components, or buys index options and sells options on the index. Yeah. So I'm concerned that this is going to be, I don't know, let's read through it. It sounds to me like what's going to happen is I'm going to say, well, this sounds like a good strategy, but I would need to be trading the options to do it, because it sounds like what they're doing is the mispricing is in the option and not necessarily the index. Why do you talk trade without strategy? Well, because, Anwar, if I just gave you this strategy, I would be denying you the single greatest thing that you can ever give yourself, which is learning how to create your own strategies. So here's the thing. I could come in and I could give you like an exact setup. Okay. I'll do it right now. Okay. Sometimes a liquidity hole will open up. Like we just saw there. Did you hear the noise? It went doo, doo, doo. That was because we crossed a price and nothing traded at that price. The futures skipped it. Okay. So, and then I started to see some large orders there in that location. So I know that we found a liquidity pocket. A liquidity pocket is something that will kind of pull us back in, and in certain situations can even cause short-term reversals. Right. And so that's how I'm able to take a trade there. And it's close. You think we're going to get it? I think I might get it. Okay. There's a strategy. Now, how did I come up with that strategy? The thing you should be more interested in isn't like what Seth's strategy is. What's more interesting is, how did Seth find that strategy? Well, the way that I found that strategy was I read a lot of empirical analysis, scholarly studies, and somebody here on the stream recommended a book that had a lot of models in there. And through reading that book, I got an understanding of how the order book results in a square root law of market impact and can create these liquidity pockets, right? And then I, did a bunch of study, did some back testing and programming it and everything to try and find these situations where we get, I lost my train of thought there. Where I can get a good risk reward and everything. Okay. So it's how I come up with it is way more important than like what is the strategy. Because the thing is that if I give you a strategy, that one is one that I feel like probably me telling you that isn't going to ruin the signal or anything like that. Now the book that we're talking about is Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Beauchat. I mean, there's the other people that helped him write it, but it's Beauchat is the guy that's really like knows his shit. And it was Kulud that recommended this book to me. Kem Carson talks about the order book as well. I've read large number of those studies from European authors. Yes. If Kulud could give me another book recommendation, I would appreciate it, because I'm really craving something that's as good as this. I'm really craving something that's as good as this. Although you know what, I'm not sure I'll ever come with a better book than that. There could be other books that would teach you the same thing and would have just as much of an impact on you. But here's the thing that you learn from that book. The main thing that you learn from that book that is so important. The efficient market hypothesis is complete hogwash, and that there are statistical properties about stock markets that you can observe empirically and are consistent and are created by the structure of the markets. In particular, there are certain behaviors that are created simply by using a limit order book that will always exist. And the market will try to arbitrage out any kind of statistical inefficiency that it will happen, so that things kind of end up being a random walk. But there's some imperfections in that. There's for instance, volatility clusters is a really great example of a contradiction on that one, right? Hold on a second here. I probably should have bailed on that, but I'm just gonna leave it. It's probably a bad trade, but anyways, but because these orders can move markets, right? They tend to arbitrage out the statistical inefficiencies, but they don't become informationally efficient, which means that there could be a piece of information, like that the Federal Reserve is going to taper in 2 months, that aren't accurately priced by the markets, right? That's really the big. I mean, the book gives you so many tiny little things, and those tiny little things are the things that you can really build a strategy out of. But he's really trying to make this larger point, and he gets into it at the end of the book, and it really is like, oh wow, like once you accept all of those things, and really it's like there's empirical evidence to back all of this up that he's saying. He's not just saying this stuff, right? This is like what we have arrived at after 100 years of research on this stuff, right? Then all of a sudden you realize, oh, so much about what we try and do in the retail trading space is just stupid. Makes no sense. Because so much of what we do in the retail trading space assumes that the market is efficient, that the market is right about things. And that's not the case. Like the place where you're going to have the best trade is going to be one where the Federal Reserve is going to hike, but the bond market moved the wrong way temporarily because of short-term supply and demand concerns. A lot of limit order book people went to social media companies for making algos and prices for companies such as Uber. I do kind of wonder if a lot of the robots, that one didn't work out either. I should probably be going short. I shouldn't have let that one go on as long. Because it was like counter trend, right? Now, what did my robot do here? Oh, I see. Those are like the entries from before I turned it on, probably. Why is it not? That's weird. It says that it's long, but it's not. Shouldn't be. Okay, well, whatever. Beauchard has a great paper from On Random Matrix Theory and Financial Core. I think I saw the title on that one, but I didn't read it. They get paid 10 times in HFTs also this way. They aren't going to competitors when they resign. Usually there's a 2-year non-compete clause in most HFTs or hedge funds. Yeah. But what are they doing exactly? Making algos and prices for companies such as Uber. That's weird. How are we doing here, Salim? I made $80. That's not bad. I'm a little concerned that it seems like the loss the other day was bigger than the wins that you've been shown, though, right? Negative wow. Kind of sounds to me like the other thing with this dispersion trading thing is that it also sounds like I would really need to have a big data pipe pulling in information from every stock in the index, right? Imano says yes. Big data pipe required. Yeah. I don't know. I really feel like programming something right now, but you know what? We don't have to do it here on stream. I should stay focused on this, and afterwards I'm going to do it though. So I think it would be fun. I think it would be really fun to give subscribers the ability to force a message in certain circumstances. But we will probably have to ban NASDAQ Trader from doing it because he would almost certainly abuse it. Or no. I'll tell you what I'll do. Here, I'll give you a limit. Right? You'll be able to use it like certain number of times a day. That could be fun, yeah. That's what I'm gonna do. Okay, so I'm still kind of looking here, seeing if maybe I can find a short, but I don't know if it makes sense anymore. Taking the long off of that location, it wasn't a bad trade. Like it almost worked. I had 12 favorable ticks. Maybe if I had been going for a smaller target, it would have worked. Maybe I should just be, when I take a trade like that, I should be waiting for like the spike of volume, and then when that stops, take it off or something like that, you know. AWS serverless Lambda can help keep the. Well, I'm not so concerned about like, you know, I have like a fiber optic connection here, so I'm not so concerned about, you know, being able to get my machine to receive all of the data and process it. And you know, if we were really going to do something like that, we could go and get like a Threadripper machine to process it. What I'm concerned about is actually getting the data feed. Actually getting the data feed, an API that gives me that data fast enough and will send all of it to me for a reasonable price. Even then, kind of seems like that it's a really fast game and that it might not be one that I would be very good at or that I'd be very competitive in. Not network latency, more about processing in cloud. Well, doing it in the cloud might help, yeah. Yeah. CBO, are you talking about the quick strike thing? Oh no, CBOE live vol. How much is that though? I mean, are you running a strategy of this kind? Are you running an algorithmic strategy of some sort, Imano? By the way, why is it not? Interesting. Might have tried to go long here, but it was already. Something's wrong with this strategy. Something's wrong here. Hold on. Most equity auction players use live vol for insights. Okay. What are you doing here, Jay? It's the high threshold, you go short. When it enters the low threshold, you go long. And the low threshold is 0.45 and the high threshold is 0.6. See, it should have tried going short here at the open. I don't know what the deal is.
Block cell.
Oh, there's a limited version on the Fidelity portal? You do use LiveVol. Okay, so then the next question is, do you have a strategy that is on the equity indexes? Actually, let me rephrase this. Let's ask your opinion on here's the real question. Here's the real question. It seems to me that the order flow itself in the ES in particular is not as useful as other instruments, and that to really get a good algorithm working on ES, that you would probably want to be looking at, you know, the components and stuff and trying to do some sort of arbitrage instead of, you know, looking for a certain change in the orders, right? Because when I'm doing it based off of order flow, I've had some successes, but it's hard, and they have drawdowns. PCA. What do you mean by PCA? But you say, yes, that's right. PCA required right. Like, or more to the point, if I want to come out here and scalp discretionarily, that I really have no business doing it in ES unless I'm trying to do more of a position trade. That's kind of what I've settled on. PCA uses principal component analysis. Oh. Principal component analysis. Gotcha. Which would mean looking at all of the stocks in there and determining what the index should actually be, or where making a prediction about where all of the individual components might go in the next minute, and try and make a prediction on the ES. Because basically the issue here again is that price is really noisy, so you take a bunch of noise and then you combine them all together, you just have a lot of noise. And that the price that comes out of that is still just mostly noise. Difficult to predict. Difficult to predict with a favorable risk-reward profile. Okay, well, do you think that 84 is the low? 80 was actually, that might be, we could maybe try going long here. You all sound like paramedics. Paramedics, well, far more educated than EMT basics, save fewer lives. They overthink the problems. Well, here's the thing. Is like, when you go and you try all of the basic stuff and you find that it doesn't work for you, I think it's very much the case. I mean, it makes intuitive sense to me, at least, that if markets are competitive and markets try to arbitrage out any kind of inefficiency that they can find, then it makes a lot of sense that any kind of technical inefficiency that you can find will have to be incredibly difficult, right? That the reasons that there's still those opportunities is because most people do not have the sophisticated enough analysis and tools and resources and everything to actually pursue them, right? Scalping best through tracking components and dimensions, classifiers across short interest, quartile, EV debt, above, below, VWAP quartile, size quartile. Oh, yeah, it's an interesting way of thinking about it. It's some of those things. So like for instance, going through every S&P 500 stock and calculating what the VWAP should be, and then doing some sort of an analysis based off of that is definitely something that I have thought about and am interested in. It was just like, I don't want to pay for the data, you know? If I'm going to pay for data, it's probably going to be treasury data. AO says anyone going long ES is looking to get, well, that's what I did. They weren't bad trades, though. They got good favorable excursion, right? Now I'm just kind of thinking, though, like, I don't know. We reached like one VIX target is the thing. So you say data is inexpensive on equities, use APIs from TradeStation or something. Maybe I am being, I don't know. Like I often think, okay, like, are there things where probably I could have a good edge on it, but I just kind of dismissed them as being too hard, and I never actually did the work on them. And if I had investigated those instead of what I have investigated, that'd be successful. You know, this is like the really difficult question is when you're doing your research, where should you actually do the research? You know, but that's where I kind of get to, like, I'd be more interested in things that don't require a lot of infrastructure. I don't know. Kulut says he's going long soon. See, I have a really hard time being short right here. Maybe if there's a bit of a pullback. BIOS, can you explain what is going on the screen? Yeah, well, so what you're seeing are depths of markets. So these blue columns are limit buy orders, and the orange red columns are limit sell orders. And then the two columns in the middle are market orders being matched up against that best bid and best offer, right? And so you can see the price move up. And so this white column is the price, the current price. I guess it's better to watch the E-mini, right? Because that's the one that's actually moving. So you can see right now we're at 44.85, and I can just see what the DOM looks like. What I'm looking to see is, like, you know, changes in the liquidity. There's basically 6 forces, right? There's the market buy orders and the market sell orders, and then there's the limit buy and limit sell orders, right? But the 6th flow is those limit orders canceling. So limit orders can be added and limit orders can be canceled. You have to look at both of those flows. So we're basically trying to watch those 6 flows to make determinations about what the current state of the market is. And then we have so many instruments up because we want to watch the correlations to see if we can detect the mispricing. I have a research and idea gen prioritization method. So here's another question. What do you, Imano, what do you execute for futures on? Are you, like, directly connected to an API doing that? And that on the top left is that, oh, okay, so the chart in the upper left is the dollar index. Actually, why do I have it that way? It should be backwards. It should be like the dollar should be really big and the E-mini should be super tiny. There we go. That's the dollar index. You're getting hammered with bots. No, Win is not a bot. Win is just a very dedicated follower that kind of acts as like our I'll almost say secretary. She reminds us to hit the like button and so forth. But she is a real person. And which are your holdings? So I don't have any day trade positions on right now. I have a small stock portfolio, but I don't show that on screen. I don't talk about my long-term holdings much. Yeah, 84 fill, huh? I really want to take a trade. Like, here's the thing: is that like sometimes when I'm trading the E-mini, I feel like a god and like I can't lose and like I'm so good at this. And then other times in the E-mini, it's like, what am I doing? I have no edge here at all in the E-mini, you know? I think that if I'm going to do executing something manually in the E-mini, it's going to be more of a position trade, right? Which probably means I'm not going to be doing any live trades over there for a while, because I should use multiple contracts and work in a position, you know? So E-mini is hard. E-mini is hard to trade. Treasury is hard to trade too, but for different reasons. E-mini is very random. The treasury like just tricks you, man. He's just really good at tricking you. Does seem like they're still fairly bearish, and we're pretty late in the session. They're still bearish, so you know, every other day this week they would have gone bullish by now. Any thoughts on the cause of the market drop this morning? Well, so I don't see any specific impetus for it to really be like, oh, it's crazy. I feel like we did miss out quite a bit because we could have been short from 4,500 on. I think that one of the things that you'll get is if it's been a week where things are kind of weak and maybe they bought back up a little bit on Thursday, that people get out of those positions. They don't want to be in them in the weekend. And so sometimes you can close the week on weakness because of that sort of a thing. Okay, so this guy is 20 points, yeah. PPI, well, the PPI was slightly above expectation, but the market didn't really react to that one very much. Well, BIOS, that I got so screwed by that bond auction yesterday, man. I mean, it should be embarrassing. Here's the thing. I try to embrace, when I'm losing, I try to embrace it because people like to watch a train wreck, you know, but I had a flattener, or I had a steepener on. So I was long 30-year yield, short 5-year yield. And yeah, the 30-year would just had this crazy auction. So I thought, oh, it's okay for me to hold through that auction because the auctions usually don't move that much, and they usually don't move the spread, right? Oh, so wrong. So I guess I ran into a third standard deviation kind of style event, but yeah, I just got destroyed by that. So that's also that, and the fact that I don't tend to trade very well on Friday is why I'm kind of sitting out, and I'm just kind of dinking around with the sim orders on the E-mini, which haven't really brought me too much. What is the word? You know, they haven't filled that need. They opened an international repo station, and many other countries are scurrying into bonds. Apparently, they're not doing so well. I mean, it was really surprising to me that there was so much demand for those 30 years. I mean, maybe it's just because they're concerned that there's not enough supply because the Federal Reserve buys too many of them. But I've never seen an auction like that. I was so shocked and caught off guard. was, like what will really bother me isn't like when I lose, but that when the market seems so one-sided and absolutely certain of a certain outcome, and I'm not in the loop. Like, I don't know why that's happening, It's like the whole bond market knows something that I don't. It's how I feel like right now. Or how I felt yesterday. Today, I don't know if there's really anything to know. But how hard would it be to fill 2,000 ES contracts? We could calculate it. Maybe we should start tracking these sorts of things so that when you guys ask those sorts of questions, we can figure it out. We would really need to have traded 20,000. Yeah. No, yeah, I understood you said 20,000. Yeah, but do you remember the formula? Do you remember the formula? I bet you he doesn't. Constant times the square root of the size of the meta order over the volume for the period. So what we could do is we could come in and we could say, I want to trade 2,000 E-mini contracts today. How much volume comes through on average? Let's just say actually, no, let's do it this way. Volume chart ES right here. Let's say that we want to do it in a 30-minute period. Oh, you probably wouldn't be able to do it in a 30-minute period. Okay, but no, since the open here. Okay, so let's say you went on to do it in the last 30 minutes. That's 80,000. Let's call it 90,000. Right? So, C times the square root of 2 over 8, essentially. Right? Which is, what is 2/8 actually? 1/4. That's 1/4, right? That's 0.25, right? Yeah. But what's the square root of 0.25? Square root of 0.25 equals... No, that's not right. Did I do this wrong? 0.25 square root is 0.5? Is that right? No. Oh, I got it so wrong. What the hell? There we go. Okay, yeah, no, it is. It is 0.5. Okay, so it would be 0.5 times our constant. 0.5C. So what is the constant? So what we would do, the way that we would determine that constant is we would execute a bunch of times, right? We'd execute a bunch of times, and let's say today it's 0.5 C equals, well, how much did we change? Let's say today from here to here, just in this last 30 minutes, so 91 to 80, so 11 points. Okay, so we would say, for instance, that 0.5 C equals 11, right? So 22. So apparently C equals 22. Apparently C equals 22. But what you do is you would have to have actually executed that, right? Since we didn't actually execute 20 contracts, we don't know. Plus, the market's doing other things, right? Market's doing other things. So what we do is every time that we execute a large 20,000 order, we go and we do that calculation. How much did we trade? What was the volume for the time period? How much did it move? And from doing that, we get our average C that we can use to make future estimates about how far we'll move the market. Ugly. But now I can potentially think about taking more trades, right? Think that the treasury will move up? There's still kind of pressure. What does that number mean? The C, that's just, it's going to be different for every instrument, is I guess the thing. So what? Well, that was the question, right? Right? Is if you do that enough times, you can estimate how far you'll move the market based on your the number of contracts you can trade. Okay, so this is about moving the market. I'm asking about fulfillment. Will the market maker take the others? Yeah, sure. Well, like here's the thing. You're going to trade 20,000 contracts. Like if you bought 20,000 contracts, you're going to move the market up. The market is going to move up off of that, right? For you to get your fills, it's going to move up. Like what's going to happen is you'll put your bid out at 44.77, and you'll do it a little bit at a time, but then they'll say, oh, well, you're buying it, we're moving up, so you have to do it again. Oh, geez, I missed it. Can I just I want to just be like, sell. Oh, you know what? We should just average in. We should do what we were doing yesterday. Okay, so we can go all the way up to there, maybe. I wasn't asking about moving the market. I was asking about if someone would take the other side as all. Would they go at the all? Well, they wouldn't all go at the price that you asked. Probably not. Let's just look at the current market, right? Point of control is 7,000 contracts. So you could get filled. You could certainly get filled. It's just you're going to move the price up as you do it. And we can estimate essentially how far it's going to go. Right. So then you know how much is going to move. So you're coming in here and you're buying it and it's gone way further than you're doing. Then maybe I screwed up, or maybe there's something else going on, How are the markets? They look pretty shit right now. Such orders can be pre-negotiated block trades. That's true. But how do you think that they negotiate it, right? They come in and they say, okay, well, the current price is X, and if you were to execute that many, then it would move it to here, and so you need to pay us this. That's how they figure those things out. And I know this because that's how we did it at Goldman. Maybe if you're on a what do we call it? Maybe if you're in a dark pool, I guess it's a different thing if that's what you're talking about. Depends on inventory. Oh, that could be true too. You'd probably do have to really consider your inventory. So you could say, well, I can give you this much of it, but then here's how much else. Yeah. We typically didn't deal with that sort of a thing though. Like when when they were doing that sort of thing, it was always some stock that nobody had ever heard of before, and a hedge fund wants to own 10% of it. How much were they going to move it up? And the hedge fund wants Goldman to execute it because they think that Goldman will execute it more efficiently than they will. So what price should Goldman quote to them? And then that's where that formula becomes useful. Avoid emotion when things go bad. Yeah. You know what, though? Here's the thing, is that you can't really control that you're going to have emotions. I know a lot of people want to think that they can, but it's just the way that your brain works is that you can have emotions, right? Hell, I think I started averaging into this too early. Emotions are important for trading. Well, they can potentially tell you things like what other people might be thinking, yeah. But yeah, you can't control that you're going to have emotions, but what you can control is like how you react to them and deal with them and stuff. Yeah, if you lose, you lose. It doesn't matter how confident you feel about it. No, but the problem is that you can get into certain emotional states that definitely compromise your decision making, right? Like you can see it very strongly with me, right? If I get I'll get like that one good trade, and then I get that chemical fill, and then I can keep trading it, it'd be great, but I very often will just be I'm happy, like I'm satisfied because I got what I was looking for, you know. And then when I lose, it's like, oh no, I need that dopamine, like give it to me, and you get worse and worse and worse trying to chase it. I immediately called Fidelity to excise and sold in AH in 7 minutes. Each of those 650Cs, which I got for $5, moved to over 22 each in exercise. Wow. I bought Tesla 650 calls for $4 to $6 at close. Market on close auction indicative price was $6.95. Wow. It's been a while since I had a 30-point day. But the thing is that emotions are telling what's wrong and what you need to improve. Nothing wrong with that if you understand it. Potentially. That was kind of weird. You said something very insightful and clear. Like it's not like that's the first time that you've said something insightful, but I'll read it and I feel like there's a little bit of a language barrier, but what you said there was just so concise. Was it hard to study computer? For me, no. For me, it really wasn't. Well, let me take that back. Like learning, I never sat, the only time that I ever sat there and I had a hard time doing something was when we got into computer graphics. There was some assignments in computer graphics that were so flippin' hard. Like one, understanding the algorithm and the thing that you were doing was really freaking hard. But then the other thing is working with a state machine is hard. Oh my gosh. So what I mean by a state machine is that in a graphics card, what you basically do is you say, okay, I want to set this register and this register and this register. And I set all of these little things and then you run it, right? And then the next frame, all of those things are still going to be set. So you have to like change them around and stuff. And if even one of those settings isn't exactly what you want them to be, then it won't do what you expect it to do, right? So you have to figure out how to get the state machine to be correct, and it's not something that you can like debug the same way that you can computer code, right? Because it's hardware, it's on the video card, right? So it gets really freaking hard. The pre-negotiated large quantity trades are visible every day in market on close auctions, and especially large ones at major stock inclusions such as mRNA recently and Tesla last year. Okay. Anyways, but what was hard about computer science was that there was always it was so much work. Like I always felt like I had a pretty good understanding of what was going on, and I enjoyed it and everything. But there was many long hours in the computer lab, man. Many long hours in the computer lab. It was a lot of work to get a computer science degree. It really bothers me, to be honest. Not because it's like, oh, I feel like other people are cheating, but like when people say, oh, you don't have to have a CS degree to become a programmer. You can just go to this code camp and it's just as good, because they don't really teach you anything in school. It's useless. It's like, no, I'm sorry, but like I worked so hard for 4-5 years to get that computer science degree. And I'm sorry, but you going to a code camp for 2 weeks is not even close to the same experience, you know? How much money did your ticks make today? Nasdaq has been showing me what he's been making, though, Ace. I mean, he has been showing. It's because he cares, really. You say the low might be 44.72? I'm kind of feeling like I don't like this trade that I've averaged into, right? Like, I think I'm gonna move that and close that, because you're right. Like, this is kind of the time where it's like that might have been it. But the thing is, we went through the stops at 44.80. That does put 44.56 on the as a possibility, right? If you don't give a fuck, that's okay. Just ignore him then. Obsession over money is one of the feelings of the 95%. Well, yeah, because like if you think about it, you have a successful strategy, your return is going to be a random stochastic variable, right? So making decisions based on how much money you've made or lost is really quite silly in that respect, isn't it? If that is basically a random stochastic variable. You know, like coming in here and saying, well, I want to make $20, so I should take you here. I mean, the fact that I make $20, market doesn't care, right? I do think I will take it off there, though. Like I still want to leave myself open to downside, but it's getting close to the end of the stream. It's getting close to the end of the stream, and I would rather like not have the risk on and like let it take that off, let it come back up, and then try getting a better short position. Of course, the market cares. They want to take it back from you in your next trade. The market is vengeful like that, man. I don't know how it does that, how it does it, but it does come back for you somehow. It's like no fail. If I've started doing really, really well, it doesn't matter how cautious I try and get or anything, then they will just come and take it back somehow. And it's like, as soon as I start to feel like that, it's like, okay, risk off, wait a little while, let them forget about me, you know? They do, but honestly, the robots, some robots do look at that sort of stuff, like your aggregate positions, and so maybe that's why it happens. But really, when we look at, like, especially when you look at the 10-year, I think when you look at these treasury yields, what's really going on with the robots becomes way more clear, because like, look, most of these upticks and downticks, like, there's no volume on them, right? Nothing happens. They're just changing their best bid, best ask. And what are they setting it on? So surely it must be what the yield is in the cash market, right? They're calculating it, and that's how they're moving. And then they use that to determine whether they want to take how many fills they want to take there or not. You know, probably if you came in and started selling 1,000 contracts at one spot 337, the market maker might go, well, hold on a second, I'm going to pull a little bit. Then you would have to calculate how much he needs to pull to account for the amount of volume that you're trading. That's largely how it works. Okay, they went a little bit lower, but it's still pretty slow. Still pretty slow. Yeah, I don't know. So I still have this thing going on in my head that's like, okay, like what can I go and I can do? Like there are some things that I know. Okay, but for me, the pure market making approach over here doesn't really work. I would really like to find a place where I can do a pure market making approach, but I don't know, like you kind of do it in the NASDAQ, but that one kind of scares me. You know, I wish there was a thin instrument. Maybe we could do it in micro oil. Actually, that's not a bad idea. Maybe we could do it in micro crude contracts. You know, I would have to learn a lot about the crude market, but maybe I can find some inefficiencies there because like there's not very many, that's not as much data to look for, right? I felt like you were too obsessed with market making for some time now. Well, but the thing is that I haven't really been trading it like that. Well, I mean, I messed around with that. Since when has this been the case? Question mark. I don't understand. No, I was kind of doing that in the summer just for fun, right? But really, I'm more interested in I've come to realize that really what I'm talking about doing is position trading in the micro contracts. Maybe it's still day trades, you know, but I'm more interested in, you know, coming in here at the very beginning and saying, based on the order flows that we're expecting today, we're going to move up or down, you know, and in the treasury market. And things like, what is the yield curve doing? What is the basis? And what are some statistical tendencies that those things have, right? So that's over there in the treasury market. But I still come over here and I look and I'm like, you know, it would be nice to develop stronger technical edges, right? Because the issue with my strategy is if you don't actually know what's going on, right? If there is a force in the market that's really strong that you're clueless about, like was the case yesterday with the 30-year treasury auction, then you're just going to lose and lose hard, right? And you might not know when to, you know, cut your losses and when not to and stuff. Like, how do you deal with that, right? So being able to have something technical would certainly help, right? But I'm having a hard time sorting one out that doesn't involve taking a lot of risk. That's why like the scalps are attractive, because the scalps can be a situation where I could get that augmented, you know, income without taking on a ton of risk. But it seems like that in order to do that, you have to have the right opportunity. And probably you're not going to get many of those in the treasuries. Theo says he knows TA from trading CFDs in university, but you don't use any of that stuff anymore, it sounds like, yeah. AO says to put your stop at where? What? That's why I have not traded my entry points, are all gone. I see. Oh, 44.79. So does that mean that I should put my stop entry at 44.79? Lucas says I'd say more the right skill set. Use TA for bigger picture and then use order flow. Yeah, it depends on your kind of TA, right? So here's another big issue that I have with technical analysis is that I really think that a lot of the most common technical analysis, like especially like 50, 100, 200 day moving averages, are really just picking up on the fact that equity indexes tend to move up, you know? I don't think that there's really actually that much edge in them beyond that. That's kind of what the stats that I get out when I test those suggest to me. Hey, there you go, Salim. That's good. 1,300. Weekly and daily show direction. Ethan, what do you think next week's going to be like? We got some stuff next week, right? That's how you were trained. Well, I think that the traders, I mean, they never told me anything about that, but I think that they probably look at daily charts and do some degree of technical analysis on those sorts of things, but it's not enough to make money if you're going to be day trading it, right? Okay, what do we got? CPI on Tuesday, core retail sales on Thursday, and consumer sentiment on Friday. Friend of mine who studied industrial engineering was taught TA in his finance class. I found that hilarious. Yeah. Well, you know what? I went on to my university's website to be like, okay, is there like, I certainly see these European in particular saying that they're European. I was just realizing, yeah, it does seem like that's the case, that it's like these Europeans understand this order flow stuff better. So they're teaching this stuff at university. I'd like to get more involved in that. So I go to my local university. They have one class on that's basically like anything to do with trading, actually. So yeah. Why you use? Well, so to his point, let me take it at this. Like, you might miss it because it's always at the beginning of the session, but where's my chart? There it is. You know, one of the first things I always do is come in and look at the volume profile and say, where are we? Okay, well, we've been declining the past few days, and it's been quite a downtrend. It's not actually as large as in degree as some of these other panics that we've had. So it's quite different, although today is starting to get there. And if they go down to where I think they might, that certainly could be that, right? Do you think that the context of the day being so negative is, the week being negative is factors into the way that they trade today? It certainly does. Holy shnikes. Okay, so there was just a news headline coming over on Twitter that I'll wait until I can read it here. They did not like that at all. And I'm thinking I can try and work something in here a bit again. Well, I'll just do one contract because I don't have much time. I'm still not seeing it on Twitter. Oh, okay, here we go. In an effort to put pressure on Beijing, the Biden team is considering a trade investigation against China. That was the headline that pushed us. What did the Fed people do? Did they sell stocks government was holding? No. No. The government shouldn't be holding stocks, right? I don't think it works like that. Trade investigation against China, huh? Oh, great. Might as well open an investigation into Trump's ties to Russia, too. Yeah. So. AO says not placing entries till Monday. Lost all my entries. Does that mean that, like, you had some entries to go short, but you just missed them? Do you think it's funny how Trump started going against China and now this new administration is following his footsteps? It is a little funny. Although they've been, I don't know, they've done a couple of moves that have been really favorable to China too, not specifically on trade, but on other things that are probably even more important. Like China is going to take over Bagram Air Force Base in Afghanistan. Like, oh, are you kidding me? That's so awful. But here's I find the timing of this one really interesting because this morning they were talking about how him and Xi had this great chat. So what's with that? Well, what should we put down on this today's title? Weak ends with weakness. There you go. Weekends with weakness on the 10th. Have a good one. Thanks, RJ. I'm gonna try. We're gonna try and make a video, and hopefully we'll have some fun with it. So I hope I may come back and not have anything for you on Monday and be embarrassed, but I'm hoping to have a good video for you on Monday. All right, guys. I will see you on Monday. In the meantime, stay profitable, friends. Yeah, be careful. This market looks